Just happened?
Well, it is summer, which means
did I screw something up?
it's summer, which means we have interns in the office.
Dude, the interns.
So that was most likely an intern that prematurely ended our previous stream. We are back live. As I was saying, it's Friday. It's Friday of a long weekend. The markets are up. We have a commotion happening in the office.
There's security in the office right now. What? Someone's being yelled at. The building security is here to yell at us right now. Not me, not us, but... okay. Well, I hope we're okay. Anyway, man, I'm having all sorts of tech problems today. My laptop is dead. Is this charger even plugged in?
Yeah.
It is?
Wait, Aaron Thomas, what happened?
Aaron Thomas, did we just get yelled at?
No.
Okay.
We just got asked if we're closed on Memorial Day.
Oh, they asked us if we're closed on Monday. Yeah, we're closed on Monday. Duh.
AB, what did I do to Spence? I don't know. I've been trying to figure it out.
Dude, I can't even see the chat right now because my laptop is dead. So, all right.
Yeah, like I was saying, markets are just green across the board. We will talk about that.
Wait, can you hit up Chris Capre?
Yeah, tell me the new links.
Yeah, thank you. Yep. All right. So we're off to a rough start here, but that's the way. That's the way it goes. For those who missed it, the announcement this morning on pre-market prep. I will repeat what I said this morning, which is that I am leaving Benzinga, sadly, and my last week is going to be next week. So my last day is going to be June 3rd. So it seemed like the chat was pretty fired up about that. Some people were happy I was leaving, Aaron.
Hey, they always say you've never made it till you have haters.
So most people seem pretty bummed. I'm bummed too. But I will be moving to New Jersey in July, and we'll see what happens from there.
Yeah, and I mean, it's like anything else, Spencer. I mean, there will be great things about it. There will be parts.
Oh, dude, that's why it's not charging. Dude, wait. Okay, this is why it's not charging. This is why it's not charging. Look what I plugged into my computer. I plugged in an Apple Watch charger to my USB-C thing, and I'm like, my thing's not charging. What's? This is why. Look at this. Give me that. Oh my gosh. What is this even doing here?
Spencer, what is going on today with you?
What is this even doing?
I get it, you're distracted. You give the audience big news, but
whose charger is this?
That's mine.
Oh my gosh.
Man, oh man.
I'm sitting here waiting for my screen to turn on, and it's not turning on.
You said, is this even plugged in? I checked, and I was like, yeah, it's plugged in. I didn't check what you had plugged into your...
Oh my gosh. What a freaking morning. Anyway, so as I mentioned earlier, we're going to be doing a bit of a bridge show today. We'll probably go until... Well, actually, no, not probably. We will go until 1 o'clock. And then we'll hop off for an earlier version of Moon or Bust. So, yeah. How you doing today?
I'm doing well.
How's your new phone? Working out?
It's fine.
Fine?
It's fine.
Good.
No complaints. I was saying earlier, I mean, it's the markets are doing really well. It's Friday of a long weekend. I am in a good mood, but it's just hard to be overly celebratory this week, I think, still. And
yeah, that's fair.
I also was talking about how we are taking off at 1. We're taking off early today for kids because we're honoring kind of a mental health day here at Benzinga. May is Mental Health Awareness Month, so...
Yeah, it's gonna be it's a weird day because there's like no one in the office. There was like the other day we probably had like 25 people here, and today we have like 5 or 6. So
yeah, it kind of is those vibes of like during COVID when there was not a lot of people in here.
Okay, without sounding insensitive, and I'm just saying purely from an office standpoint, don't you kind of miss those days a little bit? Obviously, the world sucked, and that whole thing sucked. But from a pure just office vibe standpoint, there was literally a 6-month period where there was no more than 10 people ever in the office. and those were fun. Those were fun days.
Yeah, I don't think I was there a majority of those days, but even when I moved up here last year, when I was coming in, there were not a lot of people coming in at all compared to how many people come in. And I sound like a broken record saying it, but I feel like there are drawbacks to it. There are benefits to it. Like, I like having more people and being, having more people to talk to and stuff. I will say, I wish less people, not in the Benzinga office, but just in the office building in general, would come in, because the parking lot gets very full now.
I've been noticing that. I've been noticing
you haven't even been getting your spot recently.
I don't get my good spot anymore.
Yeah, that was like a given for like 6 months, like you're saying, like that you got that spot.
Well, I got it today actually because I was here early. But I'm okay. I can't see those comments in the chat because like the way our setup is like we have a TV showing our feed and my laptop is not working. So I see Proton left a comment and I see Crypto something, but I can't read what they say.
Proton said, "So will all the trivia questions be about how much we'll miss you, Spencer?"
No.
Crypto Hunter said, "Spence, why can't you work remotely from New Jersey?"
I'll answer that. I really did not. We worked remote. We all worked remote here at Benzinga, obviously in 2020, and I worked remote for only a few months because I really couldn't handle it. I think it's not for everyone. It was not. I learned. It was fun for like a week, and then I learned quickly like remote work is just not for me. I was losing my mind. I was home alone all day, and like not interacting with anyone. What?
That's a great movie, by the way.
Yeah, not interacting with anyone in person. There were entire weeks where I didn't go outside. And this is like in the spring and summer when we had great weather here. We only get that for a couple weeks, so it was just not. It wasn't for me. Remote work is just not really for me. I would love like a hybrid scenario where I have the option to work remote, but can go in if I want, and that's what we have at Benzinga. But I'll be moving, and so I'll figure out what's next. I don't know what that is yet, but I'm excited. I'm nervous. I'm sad. And I'm excited for the future all at the same time. So I hope that there was a lot of people in the chat today. They're like, just work remote, you idiot. What's wrong with you?
Well, I think,
not for me.
I'm sure we'll have some guest appearances on Benzinga Live. Maybe pre-market prep. You'll show your face once in a while. We'll see.
I mean, if they'll have me. If you'll have me. I don't know.
I will. I can't speak for Joel, Dennis, Mitch, but I would.
Yes, Daryl. Spencer is leaving. My last day will be a week from today, June 3rd. Well, I really rather not spend the whole damn show talking about this though. So
no, but you should wait. You should have waited to say that at least on here because we only had like 12 people watching when you said that.
Well, I'm trying to push it, but my laptop won't even turn on. Can you get my charger for me, Aaron? Thank you. I literally have no.
So let's talk PCE. That's the number we got this morning.
Yeah, personal consumption expenditures.
Why? And so for I know we all care about the CPI more. But apparently the Fed really cares about the PCE, which could help explain why the markets are doing so well today, or why the market is doing so well today.
I'm not sure I follow because as I understood it, the PCE came in above expectations because people are spending more money. Is that what I understand? I thought that's what. Thank you, Aaron. It's gonna plug in my laptop for me on both ends.
Well, okay. So I saw this is the headline from CNBC. The Fed's favorite inflation measure rose 4.9% in April, in a sign that price increases could be slowing.
Huh. Okay. Then I'll be honest. I don't understand PCE then because I thought that was just a measure of spending. Unless our pre-market prep guest today, Cameron Dawson, said that's a nominal number. That's not a real number, which means it's not adjusted for inflation. So I definitely don't know what that number means. Okay, straight up, I don't know what that number means. Maybe you can explain to me.
So this is saying that the number excludes volatile food and energy prices that have been a major contributor to inflation running around a 40-year peak. I guess maybe they're saying the Fed likes this because it excludes those because they know how volatile those are, so it can't be a real measure of true inflation. Including food and energy, headline PCE increased 6.3% in April from a year ago. That was a deceleration from the 6.6 pace. I'll be honest, Spencer, I don't know exactly why why CNBC is saying the PCE would be preferred by the Fed over CPI either.
I don't know. Aaron, can you have Benzinga tweet out that we're live on this link? Thank you.
Okay, here we go. The two numbers differ in that the CPI tracks data from consumers, while PCE is extracted from businesses. So maybe it's seen as more of a leading indicator, whereas the CPI is seen as more of a lagging indicator. Because if we're extracting it from businesses, then we can see where those costs are going to get passed on to the customers. Whereas with the CPI, we're just waiting in the end for that number coming from the consumers.
All right, that's fair. So it's more of like a leading number.
That's what I'm extrapolating from this. I don't know if that's exactly accurate. Because it's coming from the business side and not the consumer side.
Yeah,
you would assume that you would have a little bit more of an edge in knowing what is then getting passed down to the consumer. Because if it's cheaper for the businesses, it should be cheaper for the consumer. And vice versa.
All right. By the way, I'm assuming my mic is on, but I should probably check that right now. Yes, it is. Can we talk about the market today and the fact that we are? Is anything down?
I don't know.
And I'm not even saying that rhetorically. That's a genuine question because I haven't looked and I can't look right now because I don't have a functioning computer. Is anything down today?
How dead can your computer be?
Dude, I don't know. It's not turning on.
Why don't you plug it in from both sides? What will happen?
It's not turning on. I don't.
Wait, that's not legal.
Break this laptop a week before you're gonna give it.
It is not turning on. Look, man.
Dude, don't plug it in from both sides.
All right, he's gonna go deal with that. You talk about the market. What?
I've been watching the Qs because I got into basically these YOLO calls yesterday that are up 387%.
What?
Yeah.
Lunch is on you today, man.
I don't know. I'm not selling.
Oh, he's not effing selling, like Wolf of Wall Street.
Yeah, I mean, that's really my only position right now is these QQQ calls.
Okay. So,
actually, well, I did sell some and took some profits off the board. I have 2 buys left at 382 right now. So
okay.
I don't know. I just I want to see if this is looking a little double toppy though. If we can't clear above here like 306, 307, I'd see that as pretty bearish for the day.
No. What? No.
If we can't clear right here,
no.
Previous high of the day.
No.
Not bearish. I'm just saying I don't think we'll be able to go.
Aaron, what's your question? She used to just type in the password's Benzinga, man, with a capital B. He's trying to get into my computer.
What do you mean? What are you trying to say?
Your thing about 306 or 307?
I'm just saying for the day, like if we can't clear
for the
day, previous
high
of the day, then I might try to get out of the calls because they expire today.
Can you maybe get out of the calls regardless?
I could.
Can we talk about that for a second? It's been a great week.
Why don't I sell one and then I keep one? Because if we get another like 2% rally, FOMO buyers coming in, like I wish I was in them.
Okay, can we seriously reassess this trade in like 2 hours? Because I
did already sell some, so
I know, but like let's not act like let's not pretend the bottom is in, like we know the bottom is in.
I don't think the bottom is in at all. I think the market is strong today.
I know. So
there's strength today. And
so
I think
okay. So what? So you sell into that strength? Yes.
Yeah, this afternoon at like 3.
Okay, so let's reassess this trade in 2 hours.
All right.
Okay.
I have a stop loss in on them.
Okay, fine.
See, look, placed, selling at 100 a piece.
All right.
Bought them for 80 cents.
Fair.
Or I'm selling
Fair.
for $1 a piece.
I still have zero.
So I'm locking in profit.
I have like zero short-term or swing longs on right now because I kind of I unwound every swing long that I had or got stopped out of them. So I've got nothing. I'm
net very, very long right now, but I'm willing to hedge that with some puts like next week if we're weak. But I still think like there was at one point like a week or so ago where I I will stand by this. I don't think there could have been like any worse. Like every bad headline possible, like inflation, China was locked down, Russia-Ukraine war, companies were laying people off.
Oh shit.
Companies reporting bad earnings, and just like everything in the world was so doom and gloom bearish. People were calling recession left and right. That I was anticipating that, okay, as soon as we start to get like some just some good news coming in, that it could be, because we were already rock bottom is basically what I'm saying.
Can you pull up Benzinga Pro for a second? I just want to look at the SPY, and I want to look at the volume specifically in the SPY, because Aaron, did you fix my computer, man? What's going on there? What was wrong with it? You don't know? All right, Aaron Thomas is just magic with this stuff, so thank you. I don't know.
There's a reason why I'm your tech guy.
Yeah. Oh my gosh, thank you. Oh my God, I have a functioning computer again. Thank the Lord. All right, now I can go into the chat. So I wanted to look at the SPY, Aaron, if you'd be so kind, that I wanted you to look at the volume.
Yeah.
Of that, like the daily volume. Yeah, right where your mouse just was, right? Yeah, that.
No. This is a weekly.
Oh, go to a daily. Well, weeklies would be fine too, but zoom out though. Like see that big green, that big down day. It's a green candle, but it was a big down day. What was that, like April, March? What was that?
This one?
No, go back, go left.
Oh, here?
Yeah, that guy, right? Like that kind of a day. That kind of a volume bar. You can kind of see the big volume on that day. That's what I would be watching for.
Yeah, 214 million.
Right, to look for like short-term capitulation. Okay, I'm back in the chat, everyone. I just want everyone to know that I'm here and I can see your comments again. I couldn't see them before, but I'm here. So anyway, my point was though, Aaron, that the volume is going to be way lower today. It's a holiday weekend, and also consider this, and I have no data to back this up, but consider the idea that there's probably less, well, not probably, there definitely is less institutional activity today on Wall Street, and as such, days like today, the retail investor has a little bit more influence. I would think it's easier for retail in the aggregate to push around a stock today because there's just less big money at their desks. And again, I have no data to back that up. It's just I'm just guessing, really. Let's bring on my scanner and Benzinga Pro.
How about JP Morgan?
Okay, and I have to refresh my screen here. What about JP Morgan? I mean,
stock's been up like 9% this last week. I can't remember a time I've seen JP Morgan moving that much.
9%
in the last week.
In the last week, yeah. The banks have been strong. The banks have been strong. Let me. My page is refreshing. I'll bring my chart up in a second. But it's been. I mean, it's been a great week. And we know that this happens. We know this happens. We know bear markets have vicious rallies, and yet from a psychological standpoint, it's hard to look at this week in the eye and say, oh, I could take a flyer here or something, right? Like, it's hard.
I mean, I don't know. If you have a long-term outlook, I disagree. I mean, I think looking at like some of these companies where they're trading at now, whether you're looking at Google, Apple, some of these, especially those big tech companies, you look at their multiples and you don't know if you're going to see them that low.
Well, okay, like that's true. So like
for a while.
So Costco is a good example of that. I think, maybe. I don't know what the PE on Costco is, but
about 37.
Okay, 30. Really, that high?
Yep. Well, that's the PE.
But it's like, okay, so like Target, right? Like, how often do you get the chance to buy Target down like 30%? You don't.
Right. And if you have a long-term outlook for like 20 years, it's to me hard looking at some of these multiples and justifying with. I mean, it comes down to like, do you think we're going to see a full-blown recession or not? And I personally don't. Like, we have so many data points and metrics indicating that consumer strength is still strong, that people are spending money, that spending may be changing a little bit in nature versus, when everyone was getting stimulus checks or whatever, and gas prices are way higher. But at the end of the day, people are spending money. So and of course, housing prices. I mean, I think the Fed is watching the housing market maybe more than some people take into account. The Fed knows exactly what happens when, the housing market crashes, how long it essentially takes the economy to fully recover from that. So they're watching the housing market as well. And I think, in interest of trying to keep the housing market propped up, help with the overall economy, I think long term, we're going to be fine. I don't think we're going to see like a huge 08 or 07, 08 recession. Like if you go on Twitter and stuff, a lot of people are calling for.
It's funny because yesterday I said a few times that we're halfway to a recession, because it's true. We're halfway to a recession because the first quarter GDP contracted, but then you need the second quarter. In order to be in a textbook recession, you got to have the second quarter too.
And we'll see. I mean,
so you are in the camp of no second quarter.
I don't think so. Although we had yesterday the jobless, or not yesterday, like last week, the amount of unemployment claims was like the lowest it had been in 50 years. That's a sign that people are hiring. You can't have those things be simultaneously true, that people are hiring, but the economy is contracting.
That's good. That's good for me, selfishly.
That people are hiring? Well, who knows if that'll be the case in 3 months when you're done with the... All right, Spence, we got our first guest here.
All right, our first guest, Chris Capre.
No, not Chris Capre.
What?
Surprise guest, Jack Rosenthal.
Oh, damn. Okay.
Author of Teen Investing, The Ultimate Guide to Teenage Investing. I'll drop the link in the chat.
Now, there's a book that I could have used. Where was that book when I was a teenager? Well, is my question.
I don't think Jack was around.
What do you mean, he wasn't alive?
Well, might not have been writing.
Well, let's find out. I hope he was alive when I was. That would make me really old, or him really young. Let's find.
Where's the special guest intro? Jack,
What's
how you
going
doing
on?
today?
How are you?
I'm good. How are you?
Good. Thanks for having me on. Really looking forward to it.
Of course. I've got your book pulled up here on Amazon, Teen Investing. 4.5 stars. Pretty good, Jack.
It's not 5. We could always do better.
Okay. Why don't you start by giving us a little background on yourself, what you're doing now, and how you got into investing?
Sure. So, okay, just to kind of give like the recap. So my name's Jack. I'm 19 years old. I'm a rising junior at Babson College.
Wow.
So pretty much when I was 14 years old, I created something called the Young Investors Club. The way that worked is basically I pool a bunch of teenagers, each put in $1,000 in the stock market, and then we collectively manage that money. So freshman year, we had $20,000 and 20 members in the club. Junior year, we had about 40 members and $40,000 in the club. And then junior year, I decided I wanted to make it basically take it as large as I could and make it one of the largest teen investing clubs in the world. Took it from 40 to $115,000 in assets and close to 100 members in the group, making us one of the largest that I'm aware of teen investing clubs. And that was in high school. After that, I wrote this book, Teen Investing, after running the club. And then, basically when I went off to college, I passed the club off to high schoolers the high schooler would continue to run it while I was off in college. I didn't want to be a college student running a club with a bunch of high schoolers. And then after this, I actually wrote 2 more books as well. And there you go. That's the quick intro on me to you guys.
There you go.
Wait, so how much money was being run at the peak?
120,000.
Damn.
And how are you guys investing?
Wait. What was that? What was the? You have like a committee or so like a hedge fund?
Basically, everyone we'd have quarterly calls, and whoever's on the call, we'd vote to make investment decisions.
And so you would make trades each quarter?
Yes, correct.
Okay, so like you would buy something, and then decide the next quarter, do we want to hold it, sell it, add more to it of it?
Exactly. Yeah.
And how did returns fare over time?
That's what we want to know. Yeah.
Yeah, of course. When I was there, I can't speak to. Well, when I was there, I did about a 12% return. I don't know how it's doing right now, but yeah, that's what happened when I was there.
Okay.
12% annualized.
Annualized, yes.
All right, not bad.
So what are the other 2 books?
Sure. So teen entrepreneurship, that's like in the entrepreneurship niche. That one's pretty good. And then Teen Crypto is another book I wrote.
Okay. What do you think of everything going on in the crypto markets as of
It's
recent?
not good. I'm down a lot.
You're down a lot.
I think it'll come back. I think crypto is still here to stay. I just think that it's like, I think that it's just the crypto market was really, really overhyped, and it kind of had a very, very long bull run. And I think it was kind of due for some pullback, but I still think it's a good investment in the long run.
So Jack, what is in the ultimate guide to teenage investing, and how does that differ than adult investing?
Sure. So basically, teenage investing, there's a couple ways that I think about it. One, when you're a teenager, you have a lot longer of a time horizon to invest, which really makes it a lot more beneficial because you could just take investments for the long run, right? Like, oh, my camera's a little off there. There we go. So instead of having to, say, make like a 20-year investment horizon or even shorter, teenagers can make like a 50-year or 60-year investment horizon, which really gives you a lot of benefits. And that's something I talk about in the book, compound investing, another really great benefit to investing over the long run, the teenagers. And yeah, those are some of the main benefits I'd say to investing as a teenager. But really the book is just to get teenagers to invest in the first place, because very few do.
Where do you recommend people start? Because everyone's got their own take on this.
Sure. Let's see. Start where? Like
if I want to start investing, what should I start investing in? What should be my first investment?
Dogecoin.
See, I said different takes, different strokes to different folks.
Yeah, I don't know if I'd go with Dogecoin. I would just say S&P 500 index fund. That's like a very good, solid go-to investment that you really can't go wrong with, especially in the long run.
Okay. I've also heard
that's a little boring, but
no. I mean, you're preaching to the choir here, because that's where most of my money is tied up in index funds like that. What is your take on buying, just picking a company or a product or a service that you use, that you're a consumer of, and just buying that stock, regardless of whether it's good or bad, buying it and just seeing and learning from that and seeing how it behaves, and using your own business, your own viewpoint as a customer to understand the business?
Yeah, I would say that's an okay strategy. I would say I really would pay attention to the price that you're buying the stock. So what I mean by that is, like, you could say, oh, this is a great company and they got a lot of long-term growth and they're doing really well. But if you overpay for the stock, you're still overpaying for the stock. So I would, if you like a company like that, I would really try and get in at a good price point. Say like there's been a recent dip or something like that, then you can get into the stock. But other than that, I think it's an okay strategy. I would just focus more on like fundamentals and the price you're buying.
How do you do your research and your DD when you're looking at investment?
I'm trying to think what would be the best way to which method would be the best one to share. I would say, well, I'll just talk about how my investment fund works. So, sure. So I focus the majority. I'd say like half of it is just S&P 500, and the other half is individual stocks that I pick. And the way that I pick those stocks is I'll focus in on basically companies that kind of like what you were saying, that I believe in the long run, that I'm either a user of or I'm very familiar with their brand. And then I'll just kind of choose a good price point to buy into those stocks.
What is a good price? What's a good price point though?
Sure. So like, let's say I'm going to start investing in a stock. I'd look at it. I'd wait as long as like, say 5 to 6 months to invest in that company. Wait for like, I'd say like the lowest price that I could find within that 5 to 6 month period, and then buy it at that point. So obviously it varies company to company, but kind of just looking at the stock, looking at the price day to day, and trying to get it in a good entry point.
But how do you know if you're buying at the lowest entry price point? First,
you never
know?
know.
Yeah.
It would just be like, say, I don't know, say something happened in the company that you don't really believe is going to impact the long-term growth of the company. Say, I don't know, I'm trying to think of a good example. Say like with, what's the name of that company? Chipotle, like when they had that whole food scare during the E. coli crisis, like that's a good example of a price point because I don't think a whole company of Chipotle is going to go away because of that, but the stock really dropped a lot. So that would have been a good entry point to get in.
Well, eventually, but I mean, we can say that now in hindsight, right? But I mean, at the time, it looked pretty. Here, I'll pull up a chart. The stock fell. The stock fell. Yeah, it fell a lot and fell for several years.
Yeah,
too.
It's always easier in hindsight to say, "Oh, that was a great buying opportunity," than in the moment. There's a reason that the stock's down and everyone's selling and no one's buying because it feels. But I think over time. Oftentimes, like if I was telling someone to just start, I think it's sometimes best to just do like recurring investments, like especially into something like the S&P 500. Is that something that you cover in the book?
Yeah. So when I say for teenagers that aren't interested in like really picking individual stocks, I just say like, hey, just throw all your money in the S&P 500 and you'll be more or less fine because that has a diverse group of stocks already in it. And then, as you keep earning more money, if you want to keep investing more and more in that, that's a great strategy as well. But yeah, as far as going back to the price, you're right. It's like very difficult to time. And I'll admit with the Chipotle, for example, I didn't call that stock either. So it's very hard to know at the time. But just kind of looking for like a good entry point. I mean, I know you guys are asking like, okay, what's like a fundamental number or something like that you can use? I don't really have one exact one in mind, but just trying to get in at the lowest price that you could find within like a, say, 3-month period, 4-month period.
All right. What other lessons do you have for teenage investors to start investing?
Other major lessons I would say are, okay, so this is the biggest one I focus on in the book. So investing, especially for teenagers, the biggest problem is not actually which investments to pick, but more having enough money to invest in the first place. So you can't invest if you have nothing to invest. And most teenagers, I would say, try and invest with too little. So trying to open an account with $100, people go back and forth on it like, oh, there's an educational reason to it. But I would argue like you're not really making enough money on that portfolio for the teenager to get excited about it. So I recommend trying to open up an account with, I would say, at least $1,000, if not more. And then in the book, I give a whole bunch of different examples of ways teenagers can go about earning money. I don't know, like the most obvious one's working a job, but then I give like a couple different businesses teenagers can start, like, I don't know, babysitting or dog walking business, or even a vending machine, which I started when I was younger. Any cool kind of business like that are great ways to make money.
Yeah, well, Jack certainly doing more than I was doing.
Dude, you're so far ahead of where I was at. Oh my gosh, I didn't even know what a stock was when I was
jealous. You have a lot of time to accumulate those assets and wealth. So
very jealous.
Keep doing what you're doing. Keep writing about it, and we look forward to talking to you again in the future.
Thanks, really appreciate it. And I guess I got to give a quick shout out to the office on that. So I'm interning at Global X this summer. So
nice.
If you guys know that company, they're actually a big index fund. So index funds.
Yep, Spencer knows and covers the ETF space very, very. Very, very, very closely.
Yeah, well, thematic ETFs, we're very big in those.
Cool. Well, have a great summer and stay in touch.
All right, thank you so much.
Bye-bye.
Hey, can I get some help on my microphone, guys? My mic is back. My mic just died and now it's back. I don't know what just happened there. I'm sorry. I hope you all. I think I'm good, Rohan. Rohan, good to see you, man.
Hey, Spencer, have you ever seen 30 Rock?
Like, I've seen episodes of it. I haven't seen the whole show.
Okay.
I feel like you're asking me these questions now. I feel like I've like somehow offended you because I haven't seen the other guys. So now you just assume that I haven't seen.
No, I just asked if you had seen 30 Rock, because if you said like yeah, or like someone in the chat says yeah, I was gonna share a fun tidbit, but now the moment seems ruined.
All right, did I ruin it? You're saying I ruined it?
You assumed it was.
No, Jim, I'm not going to work for the SEC. I did not get fired for fudding a lot.
That's what I thought.
Waste management, Tiny Pie. You know your mob too well. Yeah, I'm just starting a trash company, in New Jersey. All right, should we talk to Chris Capre here?
Let's do it.
I haven't spoken to Chris in a public setting since we're in Vegas. Chris and I had a great. You weren't there, man. You missed it. Chris and I had a great run. It was like a 1 hour run at the blackjack table on the last day of the conference. It was a lot of fun. Let's bring.
I guess that just means we have to all go back to Vegas sometime and do it again.
I'd really rather not do that. Yo, Chris Capre, what's going on?
What's happening? What's this? We're going back to Vegas to hit the tables?
No, we are. No,
that's what I heard.
No.
Who said?
No, we're not doing that. Anyway, Chris, how's it going? How's it going, man?
I'll do Atlantic City if you want something closer to home. I'm cool.
God, no.
Spencer hates Atlantic City. I want to go. I really like that song, by the way. I don't know what's that band called.
Bruce Springsteen.
Is that him?
Man, yeah. I don't know if you have an equivalent one of those, but in New Jersey, he's basically a god. So you have to know that. Yeah. Anyway,
not among some people. But.
No. Anyway, Chris, what's new in your world? How's the market been treating you?
Well, I think what we're seeing today is kind of the extension of a short covering rally in SPYs. So let's pull this chart up and share with you guys here.
Oh yeah, let's do that.
All right, so. Okay, we should be good to go to see that.
Right. This is SPY. So give me.
This is SPY. So, the way I look at it is like, hey, we've had a couple things that kind of were setting up for a short covering rally. Over the last couple of days, we started to see some calls build up some positions. Around 400, and then as yesterday we closed, we saw in the overnight day they started to build around 405, 408, 410. And keep in mind, up until around here, there was just no appetite for calls whatsoever. There still is very, very low appetite for calls right now, like very anemic appetite for calls. But in this low liquidity environment, especially with the holiday weekend coming up, traders are not going to want to hold a lot of positions over the weekend. So liquidity is getting thinner and thinner. We notice in that process, we start to see the calls come up a little bit. And when calls start to ladder up, and puts start to come up, or in the money puts start to close, then it creates a little bit of fuel for a short covering rally. And that's kind of what we've been seeing. This clearly isn't being bought by real money macro players, because you can see the share volumes, other than today's little spike, has just been going down, 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 down. So this isn't something that's like necessarily being scooped up by real money macro players and saying, yeah, we want to hold shares right now. The bottom line is that we have the FOMC on the 15th, the VIX OPEX, the monthly OPEX on the 15th. We have the quarterly OPEX and the monthly OPEX on June 17th. And under that scenario, I don't see traders wanting to necessarily not hold long puts or some sort of downside insurance, and maybe want to hold some long vol. So I look at that as like, okay, this is mostly a short covering rally. In 2008, we saw many of these that would happen. Could be 7-10% rallies over, a 2-week period, 3-week period. And then the market would just continue lower. We had something similar like this not too long ago. So if we look back a little bit, let's compress this. We can see here we had that's a good 50-point rally in SPYs. And yet we ended up consistently lower after that. Once it peaked, nothing but selling after that. And so we ended up 80 points lower from that. So with share volume being lower and lower and lower as we get into the holidays, and VIX finally capitulating a little bit to the downside, we look at this as saying, okay, VIX has been kind of stuck in this kind of 28 to kind of 32 range for a while, and then it finally broke that. And so that, we think, kind of opened up a little more fuel for SPYs to start ramping to the upside. So, yeah. And so we look at this, and I feel like VIX or SPYs now, the VIX is going to have to play a little bit of ball, because VIX is at this major support here that's been holding. We haven't had a daily close below 25 since a month ago. So when we look at that, VIX is going to have to play ball. Like VIX is going to have to start breaking lower and lower and lower for SPYs to continue to run up to the upside. If it does, then VIX has the capacity to go to 2220, and SPYs will have a little bit of room to maybe hit 420, maybe even 430. But I think at that point, it's completely exhausted, and the short covering rally fuel is burned off at that point.
I think that we're all kind of waiting for that to happen, right, Chris? We're all kind of, well, maybe not we're all. I am waiting for that to happen. I'm waiting for the rally to kind of just burn itself out.
And you can start to keep an eye on multiple tickers like Tesla. If you look at an option chain on Tesla,
Okay.
let me pull it up for you here. So
yeah,
let's see. I'll get you a detach on that. All right, so here's an option chain, and then let's get Tesla, and we can see that when we look out to say the June 3rd expiry, you can see that beyond 850, it's rather anemic. There's just no interest. There's a little bit of tail, purchases that are happening here, but you can just see that once we get above 850, you see how it drops by almost 90%, and it just gets super thin after that.
well,
You have
even
7,500 here, and then nothing
even like 8. What is that? Like 830? Even like 830 or 820? Even like I guess the 850 is an outlier, but you can even see right above there. There's like a lot of not a ton of
And that's why I kind of look at, okay, well, even something that has a lot of bullish sentiment, we can all admit that Tesla has a lot of bullish sentiment. And there are a lot of traders who tend to think that, Tesla's going to the moon, it's going to 4,000. And when it bounces, it's going to, just never stop and that kind of thing. And so even the most bullish of sentiment type stocks, traders aren't willing to purchase a lot of interest past this 845, 850 strike.
Yeah.
And so other than this little kind of tail purchases out there, we think Tesla stalls at 850 to 900 and then becomes a good sale or a good short at that point. So it's not just spies. We see that after a certain point, the calls get really anemic and there just isn't any interest for that, which tells us that, traders are happy to trade this short term, but they're not willing to stake money further out in time that much higher above the current prices.
I'm really anticipating Tesla's next earnings report, which is in a couple months in July, because from all indications, at least, China for this past quarter was completely shut down, and China makes up a decent amount of Tesla's sales, so it'll be interesting to see the reaction to that in the earnings report. But again, that's a couple months away. But I would be considering I actually sold some Tesla, but considering adding back at a
come on! After all this hullabaloo.
But if it gets down to like 300, 400, I'd be interested.
You damn near got me wanting to short the stock, and now you're going to come in and tell me you're going to buy it again?
I said, I also that's just how it works. Like right when I want to sell it, then it's gonna turn back around. But we'll see.
We'll see.
All
right.
The Tesla story is far from over. It'll either moonshot and go to 2,000.
You spent 3 days ripping on Tesla, and now you're going to come out. Anyway, Chris, what else is on your radar here?
Yeah, so I want to kind of point out and dive a little bit deeper into the vol complex.
Okay.
And so, VVIX, which is volatility of volatility or vol of vol. And the way to think about it is like this, which is that VIX kind of measures the amplitude of the volatility. So how much the stock can move up or down. Is it high volatility or low volatility? And VIX is for the spies only. So but this just measures kind of like, hey, right now, here's the potential capacity for something to move up or down. Volatility of volatility is the frequency or speed. So it could be the same level of volatility, but is it a slow cycling or is it fast like that? And so this is vol of vol. This is what VVIX measures. Now, I'd like to note that right now, VVIX is at 93. The last time we were here, pre-COVID. Now, there's no way you can say that the underlying conditions in the market today are better off than they were pre-COVID. Pre-COVID, we didn't have a whole lot of problems in the overall economy.
I'm trying to think. I'm trying to think back. It's difficult though because my brain doesn't work. But I'm trying to think back to the start of that year and what the macro concern was, Chris. I think we were still in the the trade war was kind of over at that point. And gosh, I really don't know.
Well, think about it like this. Pre-COVID, did we have any worry about rates increasing? No.
Heck no. Not on the table.
Did we have massive problems in the supply chain? No. Did we have a war in Ukraine? No. And did we have rampant inflation? Like my friend in LA was saying he had $7.30 a gallon of gas there. So you got to look at it like, okay, did we have the same or better situation back then or now? VVIX is basically trying to say it's in some sense, I think, is being dishonest and saying, oh, we are less concerned about things now than we were pre-COVID. I suspect this is volatility being suppressed to some degree, and I don't think it's going to last long. We have a massive coalescing of events coming up. VIX OPEX on the 15th, FOMC later that day, June 17th, monthly and quarterly OPEX. And, there's a lot of things that are potentially on the board. We still have problems with inflation. We still have problems with the supply chain. There's whispers that China is considering, possibly making some sort of, venture towards Taiwan and things like that. So there's just a lot of situations in play that to me suggest volatility is suppressed and it's a little bit cheap right now. And so I definitely want to maintain some long volatility exposure, at least through the June OPEX. And then we'll reset and see what the FOMC says.
So this is the VVIX, which is an index. How would you play long volatility right now?
Long VIX, you could do long UVXY. You can sell SVXY. So, SVXY is the short version of the VIX index. Keep in mind, these are anything outside of the VIX is a derivative of VIX, basically. So it's basically looking at the VIX futures at that point, first for front month and second month on that. So you got to look at it as like if you want to get long vol, VIX is obviously one of the best ways to do it. You could also do it through a simple getting long a straddle, because remember, if you think about straddle, you're long call, long put the same strike. And so you don't need the prices to go in your favor. You just need the implied volatility to go up from the implied volatility levels that you bought it at. So there's many ways to trade long vol, but one of the most direct ways is to actually get long the VIX itself. Can't buy shares in VIX. You can only trade it by options. So VIX to me is a little bit cheap. And so we just bought some long VIX exposure for the June OPEX, more of like an event type risk play, so to say, in case VIX does start to spike again.
All right. I'm into it. We're long vol into the June options expiration. If you have any questions, anyone in the chat has any questions for Chris, I highly recommend taking this time to ask him, because Chris, frankly, is, I said this in Vegas, I believe, but he's forgotten more about options than I will ever learn. So he's great resource.
Well, I'm curious, Chris. I mean, we talk about when the VIX is really high, it's a good time to sell options. And I mean, I assume now when you feel like it's depressed, it could be a good time to buy options. Do you have any options that you're currently looking at or buying?
So it's important to understand that it's not necessarily a one-to-one correlation. So if we look at, you got to understand there's three types of vol you got to understand, which is implied vol, historical vol, which is how it was in the past, and then realized vol. Realized vol is actually how is it manifesting in real time. Implied vol is what the options market is pricing as the potential forecast of volatility going forward. But it doesn't have to manifest like that. So there are going to be times where implied and realized are the same. And if implied is cheap relative to historical, then that's really a good time to get long vol. But if implied is, say, above historical, but realized is higher than that, well, then actually IV is at a discount. Implied vols are at a discount to what the volatility is actually expressing itself. And normally, throughout this year, we didn't see a whole lot of dislocations in that. About 2-3 weeks ago, we started to see that realized was starting to tack above implied vol. So like the implied VIX moves for the day would be like, hey, SPY's estimated to move 1.75%, 1.8% or something like that. And then SPY's would have like a 2.5-3% day. That meant that implied vol was at a discount relative to the actual volatility expressing itself. So we can't look at it as a one-to-one relationship that VIX is cheap and therefore volatility is cheap, because it could be actually cheap. It could be expensive relative to historical, but cheap relative to realized. So when it comes to that, in terms of options that we actually like, we actually just got long this morning on UNG. We posted the trade for the Benzinga Option School members. And so we bought this UNG pullback here. We have been wanting to buy UNG for a few days. We've been kind of watching it, waiting for a pullback. We got our pullback and we felt, you know what, this has got one more leg down. So on this next leg down, we looked at it this morning and we saw this kind of nice impulsive bounce, 4-candle bounce, and then corrective pullback here, which to us means that there's very little selling pressure after a nice impulsive bounce. And we felt like, hey, this is a decent time to get long. So we bought it at 28.65. we're long that, and we have sold calls against that. And the volume spike on the breakout, really good confirmation for us. Impulsive corrective and another impulsive leg up. We like UNG right now. We like long commodity exposure right now, especially through the summer. The Ukraine situation obviously having an impact upon wheat, upon certain commodities. But the other issue is gas. All of these agriculture commodities are transported via diesel trucks. Once they get on land, they're transported via diesel trucks. So if diesel is expensive and gas is expensive, well, then that's going to raise the price of all these agricultural commodity products. So we like being long commodities right now. And, we feel like, hey, it was gaining when SPYs was going down, and it's gaining while SPYs are going up. So we don't see any change in inflation or gas prices anytime soon. As long as this mid-grade Ukraine war continues, we continue to see it as it being an issue. Supply chain is an issue. We like long commodities right now.
Okay.
I mean, the thesis is sound, logically sound. So can't knock you for that at all. Anyway, guys, Chris, if you heard Chris mentioned, he said I put out this trade idea today to buy members in the options school. If you have no idea what Chris is talking about, see my comment in the chat. The Benzinga Options School is basically the closest thing that you'll get, I think, to a personalized options training course. I hope that's a good way of describing it, Chris. But you basically get Chris's knowledge, you get Chris's streams, Chris's ideas, and you get to talk to Chris every single day in the Benzinga Options Trading School. I did put the link up in the chat, so it is there. Check it out. But I highly, highly, highly recommend checking it out because Chris is a monster. Chris, what else did I miss here as far as the options school?
We have a newsletter. We have an options flow newsletter that we do on the weekends, so you know what the playbook is going for the week. That also includes trade ideas. I post trade ideas regularly. Posted one today. Closed a couple trades that we had over the last few days. Like, we're posting trade ideas every single week, so you get access to that. Also, before the market even opens, I post a morning market commentary that really is giving you kind of the weather report to say, hey, look, here's what's going on in the flows. Here's what's going on in the options coming out of the market. Here's what's going on in the key open interest levels. And this is what we expect with volatility going forward. So we give our members a playbook every single day. And then Monday through Thursday, we do 3 hours of live classes. And so we call out trade ideas. We analyze the student trade ideas. We go over course lessons. And so it's really a chance to get a lot of live instruction with an awesome community that's just super all in on options. And the traders are seeing a difference. We had some traders that were just getting killed to start the year. And then after they start to digest the material, they're no longer getting killed and they're starting to generate income. We've had many traders that are making money consistently. And the trade ideas that we're posting, they've been making money. We've now had, this week might be questionable. We've had 7 weeks of straight profit, I think. And I think we've only had 2 to 3 losing weeks the entire year since we started the account. So, if you've been losing money consistently, you could just be piggybacking off our trade ideas and making money, earning while you learn. So it's kind of a full immersion opportunity, live classes, mentor feedback, trade ideas, market analysis, morning market commentaries. It's just the full thing. It's the full gamut.
I'm going to do the link in there one more time. It's a bit of a long link, so there it is. Oh, wait, you know what? Let me put it in the other chats as well. So.
Actually, let me get you I think maybe that is the page. Let me see. I have the actual, this is a shorter one. No, let me get you the actual page here.
Okay.
The shorter link. Yeah, we got another page than that. So I'm going to post this into the StreamYard, and then you can share it with everybody.
Oh, beautiful. I love it. Oh, that's a much cleaner link than the one that I have.
Yes.
All right, here's a clean. If you guys are all about clean links, you're like, I won't click on that link. It's too long. That link is nice and short. That's right there. Benzinga.com/courses/options-school. Very easy. Got it. Chris, anything else you wanted to cover today?
That's pretty much it. We want traders to just be cautious, about building up a lot of positions going in the weekend. We have the holiday weekend. Markets are closed on Monday. Liquidity is thin. There's a fair amount of flows coming out of SPYs right now this weekend. So we're going to see a lot of flows change over the next few hours. And, it's important to understand that bear markets, if you look at bear markets, I've studied pretty much every bear market over the last 100 years. They always have short covering rallies. 2008 had multiple ones. Some of them were actually quite big rallies of like 15, 20%. And so it's important to understand that there are going to be multiple signs when the bottom has happened. I don't think any of these signs have materialized yet. So it's important just not to get trapped into these, bear market rallies and thinking that, oh, it's over and things like that. We haven't seen, the problems haven't abated yet. And we still have kind of a lot of bugaboos out there that can just cause problems at any point in time. So just be smart with risk right now. Volatility is going to be very extreme. And so just be tight with risk and understand that there are plays that will do well in these bear markets, like commodities in this situation.
Yeah, I think that's very sound advice right now, Chris. And we appreciate you coming on the show and giving it to us because we know we need it.
So some of us more than others, but yes, we do need it. Chris Capre, he runs the Benzinga Option School. Chris, it's always great to talk to you. And what are you doing over there? You're making.
Michael Murray got me my food because he's a good guy.
Dude, why are you always distracted? What?
Sorry, Chris.
What are we doing over here? You guys think it's good because it's a Friday of a holiday weekend? What is going on?
Look.
Oh my gosh! All right, Chris.
Spencer, let's ditch this, Spencer. Let's go hit the tables again.
Yes,
we should. I
want to be there this time. I apologize.
I don't even know where you were. I don't even know where you were. It was the most efficient thing ever. It was efficient gambling hypothesis playing out right then and there. It's 1 hour, we're done.
We were doing like 150% returns in like less than an hour. So it was like
great.
In out, and we were just once we got in our groove, we were just killing it after that.
Yeah, it was wonderful. It was one of the best hours of the entire thing. All right, Chris Capre, again, he runs the Benzinga Option School. Chris, thank you for coming on. It is always a pleasure to hear from you. I will stay in touch, and I want to keep learning from you because you're a very smart man and you know a lot. So appreciate you as always.
I look forward to it, amigo. And, whatever your next ventures happen, I wish you nothing but clear horizons. And
thank you.
The best of luck. You're going to kill it wherever you go. 100%. I have no doubt about it. I will buy calls on Spencer right now.
Hell yeah.
Whoa.
I love it.
They expire tomorrow, though, so watch out. All right. See you, Chris. Did I just call my own death? Is that what I did?
I don't know what that was. I hope not. I certainly hope not. I did want to talk about, so I talked about the options I was in earlier, those QQQ lottos, still holding them. They've come down a little bit, but still holding them. I also made some moves in my long-term portfolio today.
What? Long-term? Now you're speaking my language. Let's go. What do we got?
I sold some like high growth names that I'm kind of unsure of the short-term outlook, and I bought some BAM, which I've talked about on the show before.
Yeah, we know BAM. Well, I know. Yeah,
Brookfield Asset Management.
We've discussed BAM.
And I bought some BX, Blackstone, as well.
All right. So what'd you sell exactly?
I sold DocuSign.
Good.
And QuantumScape.
What? Everyone stop. Time out. Freeze frame. Zoom in. QuantumScape.
Yes.
This is in the Roth IRA, isn't it?
Yeah, it was. I want to add back to QuantumScape at one point. I just think like I was looking more into the company.
Dun.
I think we're years and years and years away, and I could be like this could be the worst timing in the world. Like it could easily go up another $10, in the next 3 months if we keep having days like today. It's up 7% today. I'm not, I still do want to have exposure to this company long term in case it is able to do what it's promising to do, and because if it is, then it'll be in essentially every electric vehicle of the future. But I'm learning that you can be too early on companies, you can be too early on industries, and right now I want those companies like BAM, like Blackstone, that are more actively making money, and both of these companies do have growth aspects to them as well. Brookfield Asset Management is one of the largest investors in clean energy projects, not just in the U.S., but around the world.
Okay. All right. Wow. Wait. Well, what prompted? This is a lot of activity, man. What prompted all that? You just came from the top rope. Oh,
I was just looking at my long-term portfolio this week or this morning. And I was looking at like some of those names, and I was like, you know what, this could be like as strong as I see QuantumScape in the near future. And like I said, I would like to add some back to it, but they're all. I just think these kind of pre-revenue companies, and DocuSign isn't really not as bad as QuantumScape just in terms of like how little money they're making. But QuantumScape is virtually making no money.
Yeah, this is not the time to be making no money. All right, so to recap, Aaron...
Wait, how am I going to be back holding QuantumScape for life? I literally just sold it all. I don't have any.
You sold all of it?
Yeah.
Oh, shit.
I sold all of it.
Damn.
But I can like trade within my Roth IRA.
I know. Okay, so you're out of Docu, you're out of QS, and you're into BAM and
Blackstone.
And Black's BX?
Yep.
All right. He's swapping. This is called diversification. Well, maybe I shouldn't. He still owns equities, but he's single stocks. But so there's the risk there. But he's diversifying away from growth into more stable.
Well, my biggest position in my Roth right now is Voog and Apple. And Voog, I've talked about why I've been buying Voog recently because Voog is essentially the S&P 500 growth, but it really, if you look at it, it's basically everything but energy and like financials. And energy's been so strong that I kind of wanted the exposure sans energy because then if things catch up to it, then my returns holding Voog would be better than just holding the regular Voog.
Can I just like show you something on those? You brought up on the screen there. VOOG is the candles. Oh wait, you can't see, but the purple line is VOO. There. Is that better?
So yeah, Voog's gotten hit, whereas Voo has kind of held up.
I'm fixing my appearance so y'all can see. So y'all can see the tickers there on the scales. There we go. Okay, so yeah, Voog, but you can see the correlation is clear as day. I don't know what that was about in 2012. That's weird for the VOO, but that's not right. That's not real. Very correlated, but over time, yes, different return profile because the VOOG doesn't have, like Aaron said, energy and financials in it really. So it's outperformed the last decade. So all right, nice. All right. Tactical movement. Mm-hmm. Tactical movement.
I could go through. What is Luke doing?
Something is something in the water today.
I'm not drinking water. I'm drinking Gatorade.
Luke Jacoby just walked over here like flailing his arms, and then just ran away.
All right, I'm running through all my holdings in the Roth. Baba. Apple.
What is happening?
Asana.
Wait, sorry. Start over, please.
Baba.
Okay.
Wait, I want to see if it gives me like a weighting of my portfolio. No,
that's a good question. Thank you, Crypto Hunter. I really do appreciate that. Thank you for commenting about my beard too.
All right, we got Baba, we got Apple, we got Asana, we got AT&T.
That's 4.
We have Blackstone.
That's 5.
We have 1 share of Blink Charging Company worth $16.
What? Was that your free stock or something?
No, I just liked the company and I bought it. A share of it.
Come on over, Luke, if you want to say hi.
We have Brookfield Asset Management, which I bought today. Well, it's actually pending.
You don't have to worry. Okay.
You don't have sold DocuSign today. We have Ford. We have 1 share of Netflix that I bought at $190. We have 5 shares of Neo. 0 QuantumScape. Sold that today. 5 shares of Rivian. 14 shares of Sunrun. 8 shares of Voog. And then 2 shares of Warner Bros. Discovery that I got from holding AT&T. There's the Roth.
Right here. What's up?
Hey.
Wait, I just wanted to give the updates. I made 3 live trades yesterday. I was about to check them and see how they're doing. All right, so we got Redbox, June 17th, $4 puts. We're up $9. Not printing.
Not printed.
Not yet.
And $9 is $9. I love this one. Every time I scroll past it, DD puts up 6K. Great.
Wait, Luke, sit down over here for a sec.
No, I can't.
All right.
I'm actually on a call. I said I'm getting a call on the other line and put it on mute and ran over here. And then, did you guys all hear the good news about Spencer?
Yeah, everyone heard.
That's awesome. This is gonna be sweet, AB.
Yeah.
What were the other tickers yesterday, Spence? We had the Facebook.
The red box.
There's
the Facebook.
There's Facebook and there was one more. What was the other one? Was it Upwork?
Yes, it was Upwork.
Okay, so Facebook. Wait, we sold puts on Facebook. Didn't fill.
Can you address he's on the other line with you right now.
Okay, all right. Yeah, I gotta go. I literally said, I'm like, oh, I'm getting a call. I gotta grab. I'll be back in 1 minute. Oh, that's a bummer. Okay, so only Redbox filled. Of any of them that would fill, that's the one I want to fill. Okay, we're up $9.
Come on, he didn't even get fills and everything. He's updating us in trades that didn't even happen yet. All right, BAM was the ticker there. Brookfield Asset Management. So FYI, we do have one more guest joining us. Not now, but in a few minutes. Tim Quast will be on today. There's a lot of very nice
Someone
comments.
said why and what Brookfield. I bought Brookfield Asset Management, ticker BAM. Basically, my thesis is just that it's a company that's actively making money, which I like right now, but they it's not really a growth company because it's an asset management company, but it's investing in growthy companies in clean energy. And so it's to me one of those stocks where you get the rare best of both worlds, where it has like the value aspects of paying a dividend, actively making money, having a strong balance sheet, but then also having exposure to some of these areas within growth.
Yeah. Okay. I mean, I dig it, man. I dig it. I'm for it. Did you mention the weightings, or you never did? You did. You said no. You said your shares. You didn't say.
I know it doesn't tell me the actual weighting.
Then I don't care. All right. So just so everyone knows, this is not my last day. I'm gonna be here next week, so you can save all the sentimental shit for next Friday because I'll still be around Tuesday, Wednesday, Thursday. Okay, so we're gonna have Tim Quast joining us in around. I told him to come on at 12:45 because we're gonna hop off at 1 today. So let's see if he actually does that. And did we talk about Ford yet?
No.
Do you want to?
Do we have Ford news?
Yeah.
I didn't see.
Please. I want to take a wild guess, and I'm gonna say without looking at Ford yet. I'm gonna say Ford is near unchanged on the day. From the open. Ah, damn it. It's still up.
What was the news?
They delivered their first electric F-150. But, we knew that was going to happen.
Just the first one?
Just the first one.
Oh.
Oh, exactly. Oh.
Yeah, I mean, that was always going to happen, right?
It was always going to happen.
It
was always going to happen.
You know who hasn't delivered their first truck?
Yeah, we know. Starts with T and ends in Esla.
Yep.
Rhymes with Schmessla.
What was someone find me the original?
Shoot.
Someone find me the original promise date of a cyber. Let's see.
Shannon, this is why I keep you around for reminders like that. We are doing trivia today. Got kind of mucked up a little bit, but thank you for the reminder. Yes, we are doing trivia. Maybe we should do that soon. Let me holler at Enver. Wait, what did you just ask about? Sorry.
I was just trying to figure out the original promised release date of the Tesla Cybertruck. It was supposed to be 2022, but now they're saying they're not even going to begin production until 2023. So the original release date was supposed to be this year. Now the original production start date is going to be next year.
Yeah.
But global pandemic, things happen, I'm sure.
Yes, things happen. All right, Enver's on his way. I just put up the bat signal. Enver's coming.
I do need to talk to Luke ask him something before he leaves.
Where's he leaving?
I don't know.
Wait, did you see Luke last night? I forgot. Don't tell him I forgot.
What do you mean?
You don't know about this?
About what?
Luke was on the news last night.
Oh, no, yeah, he said it. I forgot. I didn't watch.
All right, we're going to have to watch it later, you and me.
All right.
All right.
We'll act like we saw it live.
We're going to have to act like... Okay, so producer Enver has been summoned, And yesterday we tried to do trivia. It was all messed up because of there was a second stream and the software was confused and computers are stupid. But we have one stream happening right now, I believe. And if that's true, then trivia should work. So, just to repeat the spiel from yesterday, we're doing trivia. It's movie-themed trivia in honor of Top Gun, which is out now in theaters, and I'm hearing is incredible, and I will be seeing it this weekend. So we've got some trivia questions ready. If you've never played before, here's how it works. We're going to put some questions up on the screen. You're going to put the number of the response that you think the answer is. So number 1, number 2, number 3, number 4. And then it'll record all of our answers, and the winner will get some free Benzinga swaggy swag. Are we ready, producer Enver? You can go say hi to Luke if you want. You can do your thing. Or if you want to wait till Tim. It's up to you.
We are ready.
We are ready, Enver. Let's get some tunage going. Let's bring on the tunes. How's that? Looking good here. Looking good. No, Luke is not leaving crypto. Don't worry. I mean, he's leaving like the office today, but I don't know where he's going. I don't know. Oh wait, actually, he did say he's going out of town. He has a trip or something. All right, movies trivia. Question numero uno. Here we go. What was the? Oh my God! What was the name of Rocky Balboa's dog? Wow. Was it 1 Tiger, 2 Sly, 3 Champ? Wow, that is 4 Butkus. That is obscure. I'm gonna go with 4 as well. And let me know if the music is too loud. I can turn it down. Wow, what an obscure question, Enver. I've seen a lot of 3s. Oh, was it 3?
It's gotta be the champ, man.
All right, let's see if the answer. I guess 4. That seems like a cliche. Butkus was a famous football player, so. Oh, it was Butkus. Nice. All right. That was a total guess on that one. Named after the former Bears linebacker, Dick Butkus. Yes, that's his real name. All right. Question numero 2. Out of how many do we? Let's see how many questions we have here. I think we have 7. Is that right? We have 7. All right. What was the title of the first Bond movie released in 1962? Was it Thunderball, Goldfinger, From Russia with Love, or Dr. No? This is an easier one. Oh, there's an idea, Shelly. Enver, can you replace me on shows? There's an idea.
Hey, you know I can, man.
Love this guy. Love him. Love him. Enver has been by far the most vocal of my coworkers about me leaving. He is laying the guilt trip on super hard these past few days. Get Enver on camera. I've tried, Tiny Pie. I've tried. I came close once. Dr. No is the answer. It was the first Bond movie. From Russia with Love is number 2. Goldfinger is number 3, and Thunderball is number 4 in order, I believe.
You know that?
I do know that. I own all those DVDs, actually. Fun fact. Ask me where those DVDs are. I have no idea. But they're somewhere. Shelly, you want to email? I'll put my email up on the screen later. In The Wolf of Wall Street, what did the actors snort in scenes that involved cocaine? So not cocaine, or it could be cocaine. Flour, cocaine, baby powder, or B vitamins. I'm going to go ahead and say B vitamins.
I guess flour, but I don't think that would work.
That seems dangerous to me.
Yeah. After I said it, now I'm unsure.
B vitamins, not to be confused with A vitamins. Yeah, consensus here seems pretty clear cut. Yeah, all right. Number 4, B vitamins. Question number 4 is on the way. We are about halfway done here. approaching halfway point of this segment. After this, we will bring on Tim Quast from Market Structure Edge to take us home here into the end of this show today. Shelly, my manager is Aaron Bree. You'd have to speak to him. The 2002 film 28 Days Later is mainly set in which European country? Is this the one with the dragons?
Vampires.
Vampires? Is it the UK?
No, not vampires. Zombies.
Is it the UK? Is it Italy? Is it Germany? Or is it France? What's the one I'm thinking of with dragons?
I don't know what you're thinking of.
I've never seen this movie before.
Oh. No. Wait. That's 128 hours. Or 127 hours.
What are you talking about, Aaron?
He thought it was the movie where he cuts his arm off.
No. That's yeah.
This is a zombie movie.
What's the movie I'm thinking of with Christian Bale and the dragons? Someone? Help me out.
Aragon?
No. It was the UK. Cool. I think that's what I guessed.
Game of Thrones?
No. There's a movie something about that. I just don't know what it's called right now. Reign of Fire. See, Taylor gets me. Taylor Adams gets me. Thank you, Taylor. I've never seen that either, but I just know about it. Okay. Question number 5. The first rule is you don't talk about it. Is a reference to which movie? Unthinkable, The Island, which I hear is great and I've never seen, Fight Club, and American Pie.
I'm going to go American Pie here.
You never talk about American... Let's change the tunes up. You never talk about American Pie. Ever. First rule of American Pie is Apple. The second rule is don't talk about it.
You know Brad Pitt went to Mizzou Journalism School?
I did know that, actually.
Really?
Yes, I did. I knew he's from Missouri.
Wow.
Yeah. And if I didn't know that, you'll never know. All right. Let's see who gets this one wrong. I mean, I'd forgive you if you didn't see the movie before or read the book for that matter. Yeah, Fight Club. An all-timer for sure.
Ed Norton.
Ed Norton, Brad Pitt, Meatloaf. Don't forget Meatloaf makes an appearance or several.
R.I.P.
Helena Bonham Carter. She's fantastic. Question number 6, our penultimate question on this edition of Benzinga Live Trivia. Here we go. How long did it take to render each frame of the CGI scenes in the movie Avatar? 47 seconds, 47 minutes, 47 hours, or 47 days? Well, I'm guessing it was 47 something. I'm going to go ahead and say 47.
1/24 of a second.
I'm going to guess 47 minutes.
Even 47 seconds would be a very long time, I feel like.
47 seconds times 24 to render 1 second of movie time.
Right.
What I don't know what, yeah. Speaking of Avatar, you know they're making a sequel. Finally. It's coming out like I think this year.
Probably took a lot of time.
47 hours?
No way.
47 hours to render 1/24 of one frame of CGI. Really? Damn. It must have been some fancy CGI, which we know it was. That was kind of the whole point, right? The plot was irrelevant. It was all about the CGI. All right, question number 7. The last question of Benzinga Live Trivia for today is, what famous film character quipped, frankly, my dear, I don't give a damn? Rhett Butler, Pirates of the Caribbean, is that a character? James Bond or Hannibal Lecter?
I honestly don't know this.
This is from the classic film Gone with the Wind, which I think I'm going to guess that came out in like 1928. I could be off by a few years. Maybe it was 1931. I don't know. Very good movie. Very long movie. This was scandalous at the time. To say the word damn in a film was scandalous. Enver, did you screw this one up?
Yeah, just the second answer.
Is that it? Is that his name?
I think so.
Is Red Butler his name? I don't remember. I know it's not the other three, so I'm assuming that's the answer, but I don't remember the guy's name.
Yes, that is his name.
Okay, good job, Benfer.
Love you.
Thank you. All right. All right, that's it for trivia. Do we have a winner? We do. David Lynn. Didn't David win like yesterday? David, didn't you literally win and guess that chart yesterday? He guessed the Dow, right?
Damn. He's on a
David,
roll.
did you ever email us? Did you ever email us?
No, I think Hex Pony beat him. And David
No,
was
but
second.
Hex Pony said David can take it. So, David, email us shows@benzinga.com. I'll put it up on the screen, okay? shows@benzinga.com. Email us. Put trivia winner or free swag or something in the title so we know it's you. And we'll send you some swag because you earned it because you know your movies. All right, it is 12:46. We've entered the final 15 minutes of today's show. Let's round it out with one of our favorite guests.
Someone who knows what they're talking about.
Yeah, certainly not us. Tim Quast from Market Structure Edge. I have questions. Hopefully he has answers. Mr. Quast, how are we doing today?
Good Friday greetings to you both. Very well, thanks. How about you guys?
It is a nice low-key, I mean, every Friday is low-key here, but this one feels especially casual at Benzinga. Something is in the water today. Aaron's like eating, and it's all good.
I'm finished eating now. I had to just get my lunch in before Tim because I wanted to be firing on all cylinders. I needed those, that brain fruit.
Carb loading? Are you
So
carb loading, maybe?
Tim, here's my question for you. On a day like today, I hypothesized this earlier without data, but if anyone would have the data to back it up, it's you. Is it possible that because there's less volume and less institutional flow out there because it's the Friday before a holiday weekend, is it easier for retail to push price around today?
Sure. Yeah. Of course.
Sure.
Yeah.
All right. There we go. Look, he agrees with me.
Yeah, but why do you think this is just retail buying today?
No, I didn't say that. I just think it's like, if retail, like if GameStop was going to squeeze, I think today is a good day, right, for that to happen.
Is it? I don't know.
I don't know. I guess any day is a good day. But all right, Tim. I didn't expect that answer, honestly. So cool. What do you see? What do you see on lower volume days typically?
Well, there are two things that happen on lower volume days. Number one, active, rational thinking order flow, not that the order flow thinks, but we just described that as active investment, has a better chance to set prices. And it's because prices change less frequently. And that will enable, we measure what we call rational price. It's a measure of behavior that traces to a company's story is better able to compete. What I tell folks, the way to think about this is I'll give you a sports analogy, and in this case, a basketball analogy. So you can practice a play in practice in half court, and there are 5 players, and the coach can say, okay, so-and-so on the wing is going to come over here, and the point guard is going to pass the ball, and he's going to take a shot, and you guys are going to rebound. And so that works great in practice. Now, put 5 other players on the floor, extend it to full court, and try to run that play. It's much more complicated when you have to compete with someone. So when the competition to set prices diminishes, or the competition for order flow diminishes, then the party that is on the floor will have a better chance to set price. And there's your answer too, Spencer, to retail flow. But remember that most retail order flow is going to be purchased by somebody. Right. And so it will still get exploited. I was a principal seller today. I'm trying to remove money from the market because I don't like to park money for a long weekend right ahead of an index futures expiration on May 31st, when I know that all the big money is going to be trying to true up their tracking. They may be very interested in taking gains, not chances, just like me. I even cut the only disaster I have ever had, and I've talked about it repeatedly, certainly with the edge users, that back on January 4th, I put in a limit order in Netflix And I never use limit orders. Certainly not non-marketable ones. If I'm going to use a limit order, I'm going to use a marketable one, which means between the bid and offer, folks, that I believe has a very good chance of filling. So I will be on the lower end of that spread if I want it to fill. And I think that, you know what happens? I always end up paying more commission because I pay a commission to see where trades go. And I'm going.
Well, I mean but you know that going in, that's a feature, Tim. Yes, I mean you're paying a commission for a marketable order. That's how.
Well, no, you should get free trading. I only pay a commission at Interactive Brokers so I can see where my trade executes. That's the only reason I do it. So, for instance, I sold DGX. So the trade, and I only had 95 shares of it. And so when I put a marketable limit order in for it, and I still want to come back to this Netflix example because it's a good lesson. So then I watch my trade get split into 61 shares and 34 shares. And both trades executed at the NYSE's retail liquidity program. So some high frequency trader got paid to take the other side of my trade and turn around and price the market twice with my trade. That is the whole problem with the market. The market devolves into the pursuit of pennies or tenths of pennies. And then we begin to think, oh, the market has recovered and isn't everything wonderful? Even though all around us, think about what has happened in the last week. We have this tragedy in Uvalde. We have GDP, the second estimate, down to negative 1.5%. We see new home sales the worst in 9 years. Savings rates are the worst in 14 years. We're surrounded by data that should have us thinking, that's not very good. And the Dow goes up 1,000 points. Does that make sense? How does it make sense that ROST goes down from 93 to 72 and back to 90? How is that rational? So traders, here back to my Netflix point.
Yeah.
On January 4, broad market sentiment was 7.5. Statistically, the probability of gains when this broad market sentiment is 7.5 is a negative 5%. There's no statistical chance of gains. And I was going on a sailing trip January 5th, and I stupidly put in a Netflix market limit order at 620. And it stopped rising at 619. And I sold it today for $194 just to get rid of it, right? So colossal disaster. My only and I've still made a ton of money this year. I had a fabulous, from February to May, I've made a ton of money, but I will forever remember that lesson. This is the lesson of limit orders, people. Everybody, all the people who buy them know exactly what the supply-demand balance is. They only fill it if there's an advantage to doing so. So realize that. So if you're going to put trades in, think very carefully. Marketable trades will give you the worst offer, yes, but you will get instantly filled if it's 100 or less shares, because that's the law, which leads us around to what's been happening in the market. So Citadel, Virtu, Hudson River Trading, Quant Lab, Infinium, GTS, Susquehanna, on they go. They all know that if they put in tiny little orders, the average trade size now in the S&P 500 is 98 shares. If I put in a bunch of marketable trades at 98 shares, guess who's going to have to buy them? Goldman Sachs, Morgan Stanley, Citi, JP Morgan. They have to by law, because that's where I'm going to hit them. I'm going to hit them in dark pools, sometimes on the exchanges, and I'm going to drive the market up until people look around and go, geez, everything looks pretty good. It's awesome. Let's start buying. And then they'll drop the anvil on you. I'm not saying that is absolutely going to happen, but I hope, traders, that you I have opened your eyes to think about how the market works and what the risks are. And one of them is holding stuff over a 3-day weekend, unless supply and demand are very, very strong.
To me, the Netflix example sounds more like you bought a stock when it was way overvalued, and then the market repriced it, and then it came back, and then there was bad news, and then it came back down. I don't like realistically, Tim. How much did the limit order really affect that? Unless you're saying you wouldn't have gotten filled.
Oh, I would have just sold it, right? In any other circumstance, I would simply have executed a marketable trade. I would have taken, because I made a very nice amount of money on it. So Okay, that you raise a great point, Spencer. You could say all that after the fact. At the time, in January, no one thought Netflix was overvalued.
Sure,
and what difference does it make what the price is? After the fact, we could say, "Oh, their subscribers have slowed," and blah.
Sure.
But that after action review does not. My mistake was to leave the country for 2 weeks with a limit order sitting out there. Right? That's my mistake.
Oh! You didn't get filled on day one.
I didn't get filled.
That's what I was. Okay. Wait, you said.
And I have a good till cancel. So I have a good till cancel, which means it's not for the day, it's good till cancel.
Sorry. So wait, let's put. You know what? This will help me to pull up a chart. So this was in January.
Right, January, and the whole market topped. Tech was topped. I knew it. Well, I mean, I'm fully aware of the condition in the market, and I thought, I'm on my up here, as Kramer said on Seinfeld in one episode when Jerry said, "So Kramer, you're really going to California?" And he said, "Oh, Jerry, up here, I'm already gone." I was right there, right? So that's a funny line. But there's the trouble. You can't leave an order sitting there hoping someone buys it if you're going to be gone, or if over a long weekend. It's just bad practice, traders. Those are the kind of things, there's this great cowboy saying that, success in life is about exercising good judgment, most of which you discover by first exercising bad judgment.
Right.
So that I will not make that mistake ever again.
Fair enough. Okay. I guess I didn't realize that you hadn't gotten filled right away, which would make sense as to why you're angry that you had the stock in the first place, because you wouldn't have had it. All right. Anything else you want us to know about for next week? You mentioned the index options expiration
future.
Right.
And then there's don't forget about the Russell rebalance, which I guess next Friday, Tim?
First list will be out next Friday. Exactly.
The first list will be out next Friday. That can create some weird market dynamics there, and something to watch out for. So hold on, let me catch up on the chat here. Tim, do you think we will hit and stay above 413 today? I'm assuming he's talking about the SPY. I'm assuming.
Right. Yep. The whole idea of levels of support and resistance suppose that machines that set most of the prices in the market are programmed to think that way. And I know for a fact they are not. Machines from Citadel and Virtu, they are at times, those two could set over 80% of the prices and be responsible for 80% of the volume. This is just an example. And are they using levels of support and resistance? I can promise you they are not. They're not.
That would be
supply and demand.
That'd be pretty scary if they were.
So do I think that will hold? I don't think of it that way. I buy diverging supply and demand, like CTVA, even though it's down today because of some analyst notes. Boy, that is a really solid supply-demand balance. Financials look good. The energy's peaked. Natural gas has peaked. And the dollar has been very weak. We came down from 105 to below 102. That juices stocks, tends to lift energy prices. But if it reverses, because the Fed begins to shrink its balance sheet, we're going to have that effect. So I don't know if 413 holds, and I don't really care. I trade supply and demand. And it's always possible to make money in any market doing that, so long as you take your gains, not chances, like I did in January. That was a terrible decision.
Tim Quast, enjoy the long holiday weekend, man. Market Structure Edge. We will definitely get you on next week if you're around, because we're off on Monday, of course. But I'll be in touch with you over the weekend. Have a great weekend, man. Enjoy it.
Too.
All right.
Thank you very much. We will.
Talk soon.
Thanks a lot, Tim. Okay, we're done. I know viewership today was totally fucked. I'm sorry. That was my fault. I screwed the stream up at the start there. But to those of you that were here, I hope you enjoyed the show.
Happy Friday, everybody.
Happy Friday. We're going to hop off an hour early today and bring on the Moon or Bust guys, the Crypto Boys.
Crypto Boys.
They're on here, and they're doing their crypto thing. So we're going to redirect you to that stream. So smash that like. What's up, man? Very big announcement. They have a quote, very big announcement. I don't know what that means or why I'm using quotes, but here we are. Smash the like. Have a great weekend. I'll be back on Tuesday. I'll see you guys there.